All right, so let us move on from there and see what else we have going on in the market. So again, this is all about identifying support and resistance, gang. I hope you don't stray too far from that. I mean, the foundation for what we're doing here is how do I find support and resistance? Okay? One of the questions I got, this was via email, or actually this is via Twitter, I think it was about the Aussie US dollar, on the daily time frame, and that was, will prices exhaust at the 9,200 level and possibly retrace? Because if you notice on the daily chart of the Aussie, we've had quite a few up days with very little retracement. The last significant retracement we had was back on, when was this? It was back on the 28th, I believe, of July. Obviously, July. So, daily chart, one of the questions was, could we pull back? And if we do, how far back could it go? And, you know, obviously that's a job for Fibonacci. So if this high is able to maintain, its status as the high in the market, okay, and we start to pull back from here, the first place I could look, and sometimes I feel it's too shallow, but I definitely should give it some respect, which is at 23% at 90.52. If we break that, you can see I might see some support here at 89.72. For those of you that like my swing trading approach, you'll notice that sometimes, like in this case of the daily Aussie, the pullback is pretty significant to the top line of the wave. So might there be other levels at which prices could support and we could initiate a swing trade? Absolutely. Typically, again, I don't like that 23.6. It usually is a little too shallow. You know, here's where you can apply Fibonacci to specific entry styles. And one of my favorite ways to find swing entries other than the wave is to pull up a Fibonacci level and take advantage of a correction. I love even more so when a correction like a 382 or a 50% line up with my wave. But when I see a huge distance between current prices and where the wave is, I must acknowledge that at some point I may not see this pullback. I mean, this is representing a significant pullback. So instead, could I use the alternative of the 23.6 or the 382? It's really nice to have these levels projected out there, because if prices begin to stall at that 23.6 or at that 38.2, we might have a Fibonacci support level that could help us initiate a swing buy within the context of this uptrend. Okay, so my Fibonacci analysis is specific to the time frame that I'm trading. We know there might be specific Fibonacci's to the different time frames, so don't neglect the other time frames. Just because I have a daily chart Fibo drawn doesn't mean there may not be a different set of highs and lows from which I might draw a Fibo on an intraday time frame. Okay, Jeremy, I would love to talk about Fibonacci patterns, but that might be a little too advanced for our discussion right now. Okay, I don't want to lose the crowd here who might be just getting into Fibo for the first time. But maybe in the future, or maybe in a future Daily Trading Edge, I could talk about different Fibonacci patterns. Okay? But to kind of answer your question, since you were curious enough to type it in, and I love that you were, A, B, C, D, you know, in terms of our expansion here, could this be a D point? Maybe. I don't know that we have the balance here for the ABCD. Could it be an ABCD or that lightning rod? Yeah, it could be. I want to see how much of this correction, you know, we want to, part of that ABCD pattern is where C ended up in terms of a Fibonacci correction. Was it deep enough? You know, was the C move deep enough? So that's an interesting question. Maybe we'll dedicate at least maybe a Daily Trading Edge or possibly an upcoming webinar. But that is fairly sophisticated, and I think might be a better way to do that in the future. Okay, so any questions on what I covered in terms of what Fibonacci is, how you can begin implementing it, and so forth? Okay, we can always come back to this topic at some point in the future, but I'd like to lay a groundwork here, and that's hopefully what we did here today. For those of you curious about the recording, it will be available at some point at the YouTube channel later on this month, so you can review it there. We break them down into basically 10-minute videos, and then the Interbank FX staff will index them so you'll know the different topics, and they do a really great job of that. It just takes a little bit of time to do all that. So that's just something to keep in mind if you need to review. And by the way, again, check out the YouTube channel, because we've covered Fibonacci in the past. We've been doing these seminars pretty much all year long, and we've covered this topic in the past. There might be some videos at the channel already posted that you can refer to. Okay. As far as Dave, your question about do I ever use other time frames to check my decision on a given time frame, again, the only way that I ever really consider it is, again, looking at the overall time frame of the daily. Other than that, I do not use multiple time frame confirmation. Okay. As far as continuation, Paul, on any chart, the likelihood for continuation is going to really come down to the market cycle on that pair. So my expectation of continuation, higher or lower, has to do with, if, for example, in this 30-minute Canada, which is, I believe, what your question was about, my expectation for continuation will rely on the wave acting as support and the market cycle. My wave here is not screaming markup cycle here at all. So my expectation for continuation is probably 50-50 at best, because we're a little bit more, we're bullish but also neutral. If we were more bullish, in other words, a good strong markup cycle, I'd have a higher expectation for prices to make higher highs and higher lows, but not as much within the current market cycle of this time frame. It would be a little bit more on the 15, okay? And it'd be a little bit less on the 60. The 60 is more neutral, okay? All right, as far as the Forex AM program, there are archives at StockTwits TV, but that is different than the Interbank FX channel. So I just want to make sure you guys know that that's completely different than anything here at IBFX. You can check that out. That is something I record each morning. But again, it's a completely different animal. It's not promoted or approved or whatever the word would be by Interbank. It has no affiliation with Interbank FX. I just want to make sure I make that clear. That's just something I do on my own personal time. Okay? Two very important levels. Brad, you didn't mention, I think somebody else asked before. 50% retracements tend to be fairly powerful, as are the golden mean retracements of the 61.8, 618, 0.618%. Okay? All right, so if anybody has any questions other than Fibonacci, I think plenty of them were answered at the YouTube channel and also at the Daily Trading Edge. So please feel free to check that out, and I will see you next. Actually, I won't see you next week. We're actually going to be meeting again, not on the 12th, but on the 19th. Okay? Not on the 12th, but on the 19th. So we will have daily Trading Edge updates, so you can keep in touch there. I'm also on Twitter, and of course, you can check me out in the morning at StockTwits TV. Okay, so again, thanks so much for your time. Hopefully this will kind of elevate our level of discussion next time we talk about Fibonacci, and I hope you start experimenting in the live market with these tools. Have a great morning, evening, afternoon, wherever you are in the world, and thanks so much for your time.